Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a roundup of the top cryptos of the week. Next, a discussion of general crypto news and happenings, and then we consider new and interesting projects and ICOs. All followed by a brief discussion of the weekly tech update by MAIDSAFE. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 9th of February, 2018. Today I'm joined by my co-hosts, Mike and Jason. Welcome, Mike and Jason. Thanks for joining the show today.
Hey, what's going on?
Thanks for having us.
Well, today we're going to revise the format once again a little bit. We're just going to do a weekly roundup of market happenings as our first topic instead of a top 5. We'll try to just generally cover anything interesting. So this week, let's just start with the global market cap. So we've had a pretty down week, but we've had a bit of a recovery the last couple of days. So zoom in on the 7-day mode here. So it looks like we had a low this week of 276 billion, and currently up to a high of 441 billion. That is a pretty hefty rebound. What do you think?
I think the Senate hearings that they had here in the United States seem to have coincided with the turnaround. It seemed like it turned around after they got done having their big powwow.
Yep.
So I think a lot of maybe took that as a good sign and decided to get back in while prices were cheap.
Yep. And then also just the fact that I think Bitcoin was at, about 5,200, something like that. So
at its lowest point.
That stirs. So it stirs buyers that it got that low. So.
Yeah, at a certain point, people got to be starting to think, hey, this is a good time to get back in.
Mm-hmm.
Of course, you get pretty nervous, I guess, but after 7 days, just pulling up the Bitcoin chart here. Have a look.
Looks like 6,094.
Yeah, that's what I'm pulling up there. Of course, CoinMarketCap shows a composite of different indexes, so it may have been lower on one exchange or another, but probably was. Yeah. So yeah, it was a hard week for a lot of people in the crypto community, I reckon. It's been scary when you see it dive like that. Even the hardened ones like us who've been through this a few times, it's always frustrating to see such large gains go down the toilet. But if you huddle on, eventually it comes back up and it's on its way again. So we'll see how far it goes this time.
This past year has been definitely a learning curve for me. At the beginning, I was very scared and like, hey, let's move my stuff around during these down times, and end up costing me. And then now I've just hold out, let it do its course. It'll come back around. No reason to lock in losses.
Yeah.
And patience is the key to this game. So
I think so. If you're a really good day trader and you're really tuned in to every little bit of news and every little twitch of the needle, then I guess you might say, hey, well, look, I'm going to sell and I'll buy back in at a low point and make some money. But if you're like most people, you're probably doing a dozen different things trying to survive day to day, and you can't sit in front of that. And it's a bit unless you're a professional trader or feel like you have the confidence anyway, it's dangerous because you could miss out on a lot going up or down. And I think hodling, you don't necessarily make out like a bandit, but in the end, given that crypto markets are overall relatively undervalued compared to stock markets, and one of our stories today we're going to be discussing that a bit, but there's so much more capital yet that can still pour into these markets, and probably will. So you don't have to be a bandit to do well by hodling. So I think for the time being, hodling is still a very strong position to take, and that's mostly my position, aside from getting in on really interesting new ICOs that come along. So movers and shakers. What do we got for movers and shakers this week? Any interesting ones? Let me just pull that up. Tools. No, it's trending. Gainers and losers, they call it here in CoinMarketCap. Just pull up the 7-day one. This being a weekly show, we try to focus on the 7-day averages. There's a lot of your typical riffraff of low market cap coins that shoot up and shoot down quite readily. It doesn't take much money to cause those price shifts in these lower market cap coins, so they're not really worth paying too much attention to. Looks like maybe in the top 50, I think Ravane is at number 49, so it's gone up 76, almost 77% this week. I believe Ravane, I've pulled that one up here, is a no, I don't. It's a review platform. I guess people can post reviews for products and things on it. Doesn't seem like a really awesome thing to me, but for some maybe they're keen on that. There's so many Bitcoin clones now. Some of these are Bitcoin clones. Probably some of them are forks. Some of them are probably clones. Some of them are forks. The difference being a fork, people who are who own the original chain get ownership as well in the new chain, whereas a clone, they just copy the software as opposed to the blockchain itself. Maybe a clone isn't the right word for it, but yeah. There's probably a mix of both of those. Anyway, there's a lot of those always around. I see half a dozen of these just in the top here. I'll have Bitcoin in the name. It's a bit... Status, I think Status is in the top, and it's in the top 50, maybe. It's at a 58% gain this week. That's pretty big. Going down, Tron, I've heard of Tron, that's a pretty big one. That's a 40% gain this week. Zcash, 38% gain this week. So some are still doing well for the week overall, even though it was a down week for most. The recovery's shifting that pretty quick. I think in the last few days we've had some pretty serious switches of fortunes here. Well, that's all I got in the global market cap review this week. Bitcoin dominance still at 34.2%, still above 34% rather. Our next topic is the news segment. So let's see, we've got the first bit of news. Let's see if I can find that here. Yes, here we go. First news item I have is central banker, the general manager of the BIS. That's the what is that? The Bank of International Settlements. That's what that stands for. It looks to me like he's pushing the panic and fear button and trying to promote the mainstream financial system to step back from crypto. And so the BIS is pretty powerful. I'm not sure if this is really a realistic image, if he's really that fat in reality, but the cartoon image, they've certainly painted him as a big fat pig banker. Augustin Carstens, the general manager of the Bank for International Settlements, called Bitcoin a, quote, combination of a bubble, a Ponzi scheme, and an environmental disaster, end quote, and asked central banks to more closely regulate cryptocurrencies during a speech at Goethe University on February 6th. Now, of course, Bitcoin is just one coin, and yet he's saying regulate cryptocurrencies. Of course, no matter what you think of Bitcoin, I mean, certainly mining does use a lot of power, and that's what he's probably aiming at with the environmental disaster aspect of his statement, but not all cryptos by any stretch are in that camp. So this is like he's painting all cryptocurrencies with one brush. So already, I mean, you can see how disingenuous that is. If he's that big a fool, he shouldn't speak out. So I reckon this is, a deliberate attempt by the central bankers to push back against crypto and to try to slow down its rate of growth. What do you guys think about that? Does that seem reasonable? Reasonable perspective?
I think it's right on target.
It's super on target. I mean that's they do not want cryptocurrencies to become the number one for sure.
Yeah.
Otherwise, he's on a beach at the luxury hotel behind him. So
I reckon people ought to have a look at that article. All the news articles will be linked in the show notes. Please have a look at that one, at all of them, really. But our next news topic, Coinbase to implement SegWit soon. Got that here. Coinbase crypto exchange. I believe Coinbase is the largest. Is that right? I think it is. They're to roll out
I think so.
long-awaited SegWit upgrade in a few weeks. So they tweeted Monday, February 5th, they will soon implement segregated witness scalability upgrade for Bitcoin addresses, which will help reduce transaction times and fees. And that's the important bit, and fees. I mean, transaction times is important too, but it's all related to fees, isn't it? If the transaction times are slower, then people will pay more, and then that ends up pushing the people who don't pay much right up the back end, which is no fun. So, they're in the final stages. Although they're in the final stages for testing their SegWit implementation, Coinbase reminded customers that they prioritize security and performance over new features. But, I think, once Coinbase implements that will see fees drop significantly across the board for Bitcoin, which will be great. That will be very good for Bitcoin. I'm not a huge fan of Bitcoin these days, but I'm a big fan of, I still use it for payments because it is still the most accepted coin out there, and so it's important that we see the fees get down where they need to be, where Bitcoin was envisioned as a payment system, not a digital gold. I don't need digital gold. I can hold gold and silver just fine. So that's interesting. Now our next bit of news, Ledger Wallet vulnerability. I put this in here because obviously that's a pretty big deal. People who use hardware wallets are believing they're safe, and we don't know for sure if this. I don't think this affects other hardware wallets. I could be wrong. We'll find out probably in short order if it does. But I'm just going to go through this article in more detail here because this is so important. A newly discovered vulnerability in all Ledger hardware wallets puts user funds at risk. Hardware cryptocurrency wallet manufacturer Ledger, they're the ones that make the Ledger Nano, the Ledger Nano S, maybe others, I'm not sure what all their products are. The wallet manufacturer has discovered a vulnerability that affects all of its devices and can lead to users losing their funds, according to a report released on Saturday, February the 3rd. According to the report, a man-in-the-middle attack can be performed when the user attempts to generate an address to receive bitcoins on their Ledger wallet. If the computer that is used in this process is infected by malware, the attacker can secretly replace the code responsible for generating the address, causing, quote, all future deposits to be sent to the attacker, end quote. How to protect yourself. Fortunately for the owners of their wallets, Ledger has also revealed how to avoid the man-in-the-middle attack. According to the report, users should take advantage of an undocumented feature of the wallet that displays the receiving address on the wallet's physical display. By clicking the monitor button at the bottom left of the Receive Bitcoins menu and confirming the address on the hardware wallet's display, every time they generate a new one, users can ensure that the address has not been tampered with. So those two have to be the same. If they're different, then you've got a problem, and you should not send that money. The report further indicates that this feature is not mandatory and is not enforced by Ledger's own interface. placing the ultimate responsibility for the safety of the funds on users themselves. Now here's an update at the end. The vulnerability of computers is an industry-wide problem for all hardware wallets, not only Ledger. However, the particular vulnerability was reported by Ledger in reference to their Chrome application. Ledger has since updated their Chrome application to force users to verify destination addresses on their Ledger hardware device, not just on the screen of their computer. So I was right in thinking that it might be a vulnerability for all wallets. It's not just Ledger. I thought I was just going to slam Ledger, but no, I don't care. I don't have a preference on these hardware wallets, but I don't own a hardware wallet yet, but I probably will in the future. I use other forms of off-site security, but hardware wallet is a form of offline security, and it's really good. And I recommend that people take great care with their cryptos if they don't want to see them stolen. And keep your eye out for articles like this too, because they'll help you manage problems that could come about as vulnerabilities are discovered. So never think that any form of security you have is absolute. That's a recipe for disaster. Our last news topic today is an open discussion here. Will Wall Street be crushed by crypto? So the article in Cointelegraph is "The Ethereumization of Wall Street is Inevitable, an Expert Take." So I'm going to read through the article here, and then we can have a bit of a discussion on this, Mike and Jason. The mainstream media has become obsessed with the crypto frenzy, with the main focus on Bitcoin price. By treating cryptocurrencies like any other asset class, or just as a fad, journalists are missing the elephant in the room. Investment banks are about to be disrupted big time. More than 1,500 cryptocurrencies already. These days, it is much easier to raise funds through an ICO than through traditional venture capital funds. As a result, there are already more than 1,500 cryptocurrencies out there. Just a few years ago, it would have been unthinkable for a small company with just a handful of employees to raise millions of dollars on the back of a simple white paper. Now, startups can do it with just an exciting concept and a white paper of a few dozen pages, sometimes less. Thanks to the ERC-20 standard that uses the existing Ethereum blockchain, anyone can launch a token for a limited cost without having to worry about building a blockchain infrastructure from scratch. Obviously, Ethereum can be taken by another more advanced platform, overtaken, but for now, it makes more than 80% of the market. Out of 580 tokens out there, 475 are on the Ethereum blockchain. There's a little chart here showing that. Ethereum 475, the next highest one is Waves with only 27, BitShares with 18, Omni with 13, that's where MAIDSAFE is, by the way, MAIDSAFE tokens, Counterparty with 9, Qtum with 9, Next with 8. Next, I think, used to have more. I think maybe they're maybe only counting the bigger ones there in some of these. So yeah, it's quite a handful. Of course, EOS isn't ready yet. Credits is just launching. What's the other one? The one in the top 5, Cardano. That's not accepting any yet. I think they're still under development. So could be wrong, but yeah, Ethereum has a really dominant share here, and because of their market cap, it's not likely to change. Well, Cardano's got a pretty high market cap. Once they start accepting, I would think Cardano would suck up a few. But we'll see. The genius of I'll just continue the article here. The genius of the Ethereum blockchain was making fundraising so incredibly easy. All you have to do is create a smart contract to do an ICO. Every time Ethereum tokens are sent to the contract address, the contract issues newly minted tokens that are automatically sent back to the sender. Wall Street should be terrified because Ethereum has just made investment banks redundant. Book building, the process of lining up investors to buy security to be issued, has historically been very juicy for Wall Street. And investment banks acted as intermediaries between asset managers and companies or governments wishing to raise debt, bond offerings, or equity, IPOs. Until recently, there was no way to bypass them. Now there is. Banks have not started feeling the pain yet, but venture capitalists have. Nowadays, it is not uncommon to see them in a list of pre-ICO investors. See the upcoming Telegram ICO. Venture capitalists have to adapt or be history, and Wall Street is next. There's another graph here showing the market capitalization of tokens per platform. So this is kind of like the other graph, except it's not number of projects, it's actual market cap. See there, Omni has 2.6 billion, Ethereum has 41.6 billion, and Other is 1.9 billion. So Omni is pretty high up there, and that's largely because of Tether with 2.2 billion. And of course, Maid has a couple hundred million, I think, so adding to that a bit. Beyond Uberization. Continue with the article. Initially, I entitled this post The Uberization of Wall Street, but then realized that what Uber is doing is what banks are already doing, connecting supply of capital with demand and taking a hefty fee in the middle. Uber simply disrupted a sector that had not evolved ever since it had been invented, where supply and demand were just incredibly inefficiently connected. Banks are already connecting supply and demand, but with blockchain technology, they are not needed anymore, at least not for what they're doing now. How Ethereum can disrupt the bond market. Let's have a look at one of the most lucrative businesses on Wall Street, the issuance of corporate bonds. Last year, companies around the world issued more than 3.5 trillion worth of bonds. The way this currently works is the following. A company mandates an investment bank that is going to sell the bond to be issued to pension funds and asset managers. Investment banks control this market because they have access to these fund managers. But as ICOs have successfully demonstrated, you do not need such intermediaries anymore, and companies could reach investors directly by issuing smart bonds. How this could work in practice. The issuance. 1. Company V creates a smart contract on the Ethereum blockchain that replicates how a bond works, i.e. payment of coupons semi-annually and repayment of principal at maturity. 2. Investors who wish to participate in the IBO, initial bond offering, send Ethereum to the contract address and specify the lowest coupon they are willing to receive. Step 3. Once the IBO is over, the smart contract automatically builds the order book with investors willing to accept the lowest coupon first. The marginal investor needed to fill the order book sets the coupon for a bond. And step 4. All the investors who did not make it to the final order book automatically get the ETH they had sent to the smart contract. Debt servicing. 1. Every 6 months, investors receive the coupon interest as set in the original smart contract. Actually, this goes on a little bit more. I don't like to get too much into the technicals here, so I'm going to skip over some of that. But suffice to say that smart contracts can allow for bond issuing, and I'll just skip down to the last paragraph here. Huge potential for smart bonds. The way the bond market currently works keeps many investors out. Buying a single piece of a bond often requires from $5,000 to $200,000. Hence, many investors are left with no choice but to buy mutual funds or ETFs that include a basket of bonds. With a smart bond, anyone could invest as little as $10 and get a piece of the bond. Diaspora investors who want to invest in their home countries will be able to do so. Small and medium enterprises will have access to new financing options beyond what commercial banks can offer them, and microbonds could also be issued all at close to zero cost. ICOs were just the beginning. The real disruption of financial markets is yet to come. Well, that was a bit mind-blowing when I first read it, because I never thought about bonds and smart bonds. What have you guys heard of this before? Is it news to you?
That's brand new.
Brand new. Yeah, same here.
I don't know.
Yeah, as far as that.
Go ahead.
The way I figure it is this, is that with the smart bonds, as a person who has seen what derivatives and shenanigans are pulled with CDOs and stuff, if you ever watched the movie, what was it called? Had Steve Carell in it.
I'm not sure. I don't know if I saw it. Was it about the CDOs?
It was about the derivatives and the CDOs and the way that the housing market.
For the viewers, a CDO is a collateralized debt obligation, and what that is that banks will have a certain amount of debt, for mortgages or whatever, and they'll package them all up into this CDO. They'll say, okay, well, this package will represent, all these mortgages or whatever, and that, it should, based upon our risk assessment, right, that is the critical thing. We're estimating that, it'll have so much income for a period of time, and we wanted to sell this CDO, this package of debt, and we want to put it on the market and let people bid on it, and other people can trade it and whatever. And so it's a way of the banks earning more money, because for them it sits as debts, and that while they do have it does create a trickle of income for them because people are paying off that debt, right? But they believe they can get more income by putting it out there on the market, because maybe somebody will value it more than what they do for what it's worth, and so they end up. It allows the bank to recover, to close out debts. But then these become things floating out there on the market, in the marketplace. And this was a big thing in the 2008 crash, that there were so many of these CDOs floating out there. And when the housing bubble took a big dive, the value of these CDOs plummeted, and Wall Street and people who were trading off these things were wiped out. Right? And it was Lehman Brothers. Was that it? They were erased. Yeah.
And Fannie Mae. Yeah.
Yeah, Fannie Mae and Freddie Mac were bailed out because they're U.S. government programs. Lehman Brothers, being private, wasn't, but some other big banks were bailed out with the TARP. They called the TARP. They pulled a TARP over it. They gave, I think, the Treasury got like $700 billion and allocated that out, and apparently they were paid back, but, you know how banking works with the fractional reserve system. You give them so much money, they'll turn that into 10 times that amount, and they'll pay you back, right? So, yeah, it's a big fraudulent game, in my opinion. And
The Big Short, yeah.
That's the name of the movie. But for me, the way I see it with the crypto bonds and stuff, you have basically the people after it's created. The people are out of the loop. So the shenanigans that happen on Wall Street by people with little to no ethics, morals, or scruples, who are only concerned about how many dollars go into their pockets, they're out of the loop, which is a glorious thing for anybody who wants a honest, upright investment. And as long as the people do their due diligence, just like in every financial transaction, you better be knowing what you're doing. You go and do your due diligence on the people, putting out the appropriate bond or whatever. And as far as for that, once it's set up, it's good to go. Mm-hmm. And you don't have to worry about shenanigans happening. Know that you're good to go. You're going to get your funds at a set rate. And, as far as for that, I assume that, somewhere along the line, the profitability of these things is pretty much set at the beginning. And that's something that could be very, very useful for, investors who want a specific return on their investment. Instead of getting growth, you want, money on a specific time frame.
Yeah.
For retirement, stuff like that, who are looking for investment income to live off of, like me, And when it comes time for, these digital bonds to go out on the market, I think they're going to have a fairly good reception once the initial shakeout period is done. And honestly, the fewer people that are involved in setting these things up and the fewer people that are involved, I'm more than happy to let a computer program do everything on a very specific set schedule, and especially open source. Open source is king in my way of seeing things, and seeing the exact details, i.e. the open source code, allows people who are knowledgeable to go through that with a fine-tooth comb, make sure there isn't any built-in shenanigans, and you're good to go.
I reckon there will be probably a series of standardized smart bond contracts, just like we've got the ERC-20 being a pretty standardized smart contract for ICOs. We'll probably see a series of them for IBOs. What I'm wondering, just off the top of my head, I mean, I've got to do more research into this, but for sure, And being that it's kind of a new thing, it's a very new thing, who knows what's going to happen, but the the issue with bonds is as they are issued by governments as opposed, central governments. I don't want to lump in like local county governments. There's so many governments that issue bonds and do so legitimately, and that's fine. But central governments have this tendency to issue bonds to pay for their spending, and then in the end, they go way over the top. They spend far more than they take in revenue, and then the only way they can end up covering those bonds is they either have to default on them, which they wouldn't be able to do with a smart bond, or they have to print money to pay the bondholders with, right? And printing money is, of course, a hidden tax. So in one hand they're giving you the money, in the other hand they're taking the money. So it's a fraud, right? That's a fraud. So what in the crypto world we have these coins that have fixed quantities. They can't be copied. You can't make more of them, but you can create digital coins that you can print more of. You can just make as many as you want. And Ethereum, you could probably make a coin. I'm sure that it's already been done that can just continually issue so many per month or whatever. I don't know where this is going, but I would think that if central governments ever started issuing bonds this way, they would almost certainly want the coin that they could print. They could create more of, because they inevitably end up going this route. I mean, I would hope that that wouldn't be the case, but hope isn't something that's probably a very good thing to have when it comes to central governments. Well, that's
I'm also enthusiastic about the ability to go and have essentially the company's stocks set up as tokens rather than shares of stock and stuff like that. Especially when purchasing them has minimal transaction fees, and you can hold them and vote with them, do all kinds of things. Whatever set up by the people who set up the ICO, they can set it up so that it's essentially the shares of stock are all a crypto coin.
That's right.
And I'd love to see companies actually run with that particular concept and use the ICOs instead of going to venture capital firms. Maybe go and have one that's willing to do the marketing for the ICO and whatnot. Give them a chunk of pre-ICO tokens and stuff. Say, here's your chunk, and then off to the races.
Mm-hmm.
And completely leave the banks out of the equation because they didn't see the writing on the wall.
Yeah, it's
if they don't, then they don't.
The financial revolution is just in the early phases. I think we're just the banks are starting to see that, and that relates back to our first story about the central banker, the general manager of the BIS, coming out hitting the panic and fear button. I think they're seeing what could come of this, and they want to really slow it down and find ways that they can gain more control. And I think what we will see ultimately is they will themselves be buying into the crypto markets in a big way. So I kind of feel that, and you can call me a conspiracy person if you want, but I kind of feel that they may have been behind this latest downturn, but they'll certainly be behind downturns in the future, because what they want to do is own as much as they can, and so they'll use their ownership of the media, they'll use their ownership of the banks to cause the price to depress. They'll put out news, as happened last time, and they'll say, oh, blah, 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 we're not going to accept blah, blah, blah. And you'll see the price collapse as people panic, and then, the price will zip back up again miraculously as new money flows in. So, I just, maybe I'm a conspiracy person there, but I think that's how big money operates a lot of times. If they don't get in the beginning, they get in the end, but they still don't miss out because they can manipulate people's views and beliefs through their ownership of the existing infrastructure and communication and media and finance. So I just say, be careful, hodl on, and don't be afraid that the crypto market's going away, because it's not. This is only the beginning.
And that's one of the things that I really look forward to, is when the adoption rate goes up, more and more and more, and as the market, of crypto users becomes more saturated, you'll see more businesses start to accept varying different crypto coins that have shown themselves to be relatively consistent. They're always there. They have good programming behind them, and then you see those coins will get more and more adoption. Bitcoin is the most popular at the moment, as far as for merchants are concerned. But the biggest sea change that I think is coming is when there's enough vendors who accept a crypto coin, who are, in a broad spectrum of things that people use on a regular basis, various products that people would use to get from day to day, grocery stores and such like that. And then the exchange rate between fiat currency and the crypto takes less and less and less, of a position, to the point to where it becomes irrelevant. Because once you get your cryptos, you never switch back to fiat, unless it's absolutely necessary. Now they've got some crypto debit cards, several projects that they have. They have the WireX card is currently out. It's been out for a while. They have the 10X card is fairly new. The Monaco card's fairly new. And those allow you to go and use that card on the Visa MasterCard network. Most every place I can think of takes Visa MasterCard. You can go and that to pay for whatever you need to pay for. I mean, it's very common in a lot of jurisdictions that you're paying for your card tags or your, whatever. You just do an electronic payment. Now, granted, it's not going from bank to bank, but if you have a credit card number that processes through like a Visa MasterCard, they don't know necessarily that it's 10X card or that it's a WireX card.
No.
All they have is this shows up as a Visa card number. And when you have that, the ability to convert at the point of sale from crypto to fiat, paying the minimal amount necessary, converting the minimal amount of crypto that you need to cover the purchase. When you get into that particular situation, then it's like, hey, can I get paid in, fill in the name of your favorite crypto. Can I get paid in Ethereum? Can I get paid in Bitcoin?
Mm-hmm.
Can I get paid in Cardano? Can I get paid in Ripples? Whatever your flavor of the month is, that, you can go to the grocery store and use whatever your, hey, this is usable everywhere. Crypto.
As acceptance
That's the key point.
becomes more common, then we'll see price stability come in, and then more and more people will be very keen to get paid in crypto, because they'll see it as a stable thing that continues to grow, and they can easily trade it for other things. And trading is something humans like to do, and we're often discouraged, I think, by the mainstream to get involved in trade, by the mainstream financial system. It tends to want us to sit on their currency, on their particular thing, and it limits what you can access when you tap into the stock market and the bond market. You're kind of limited in what you can trade with and hold, unless you reach certain limits. You certainly can't, as a small investor, invest in a wide range of things. So all these things are going to change. Aside from the Visa and MasterCards and that coming in, we've got local Bitcoins and local Litecoins. There's several different websites for that. I think there's a local Monero as well. There's local Dash. You can go to these sites, and some of them are pretty small in terms of volume. But if you find yourself a trusted person on there who's a good trader, and you can get a lot of access to exchange that way. So one thing I've done a few times now is I've bought gift cards on there, which I can use like a credit card in the stores that I frequent, and it's almost perfectly anonymous as well. I mean, it's sent straight to my email address, and I just punch it into my smartphone, and then the gift card's on my phone, and then I just use it when I go into the store. So there's many ways around the existing financial network if you look. And there's going to be more and more ways in the future as people continue to find develop systems to go around it. So, and there's more competition as well, keeping the price low, which you don't have really in the existing financial system with just Visa and MasterCard and a handful of smaller ones. Well, the show's gone a bit long today, and I think I had one ICO picked out to discuss, but I think I'm going to save it for next week. It wasn't very impressive to begin with, and I don't want to bog the show down too long. So maybe we'll save it for next week if there's nothing particularly interesting to come out. I don't want to necessarily discuss an ICO every week anyway. If there's not that much great out there, then I don't want to be encouraging people to get into something that's probably not going to be that profitable for them anyway. So I think we'll just skip that this week, and we'll go on to the MAIDSAFE update if there's anything else.
Yep. Sounds good.
All right. So MAIDSAFE update this week. Let me pull up the tab there in the browser. So February 8th is when the update came out. Just going to step through the highlights here. Looks like they will be holding a SAFE DevCon, it's a developers conference, on Monday the 23rd of April in Ayr, Scotland. The focus will be on developers, and the event will be live streamed for those who are not able to attend. It's nice. They need developers to come in and start seeing what they've got going. So it's more spreading the word. Number 2, they announced that they have filled the test and release manager role and have a new Rust engineer join the team. So they've got a couple new people that are coming on to the main team. Number 3, the front-end team released a new version of the Safe browser, version 0.9, and will be focusing on UX improvements. UX is user experience in the Peruse browser as the next wave of changes. So Safe browser was I think that's the first one, and Peruse browser is their new one. They're going to be phasing out Safe browser eventually, but it's I think had the most functional when they began developing Peruse. So as Peruse comes up, they'll drop support for the older Safe browser one. Number 4, the C# bindings are being tested on mobile, and the code for the messaging app and the authenticator for mobile is being updated with the latest C# bindings. So, for those who don't know, what these bindings do, this will allow app developers who use C#, which is a programming language, will allow them to build apps that can interact and communicate with SafeNet, which is written in Rust. The short of it is that this eases access for app developers to come in and develop for the SafeNet platform. So, let's see, the routing team is... just scroll down. Yeah, the routing team is going to give test-driven development another go for the implementation of Milestone 1. I'll just open that up in the other page there. And Crust is getting closer to fully encrypted communications. So that's the routers talking to each other, I believe. So getting that fully encrypted, so that'll be good. So that's, as usual, I'm not going to go too much into the development side. I'm going to step through the marketing thing here. Safe DevCon. We'll kick off with something. I'll just read their quote here. Read the paragraph. So, quote, we'll kick off with some exciting news. We're putting on a DevCon, developer conference, with the whole MaidSafe team descending on the headquarters in Ayr, Scotland for a long weekend in April. We'll be taking advantage of that fact, and we'll have everyone in one place by putting on a one-day conference. It'll be held Monday, the 23rd of April, at the Ayr Racecourse near MaidSafe headquarters. We'll confirm the full agenda in due course, but the focus will very much be on developers. Numbers will be very limited for the event, with MaidSafe covering the cost of accommodation for attendees on the evenings of the 22nd and 23rd of April. Food will be provided during the day as well, so if you're a developer and would like to come along, please email outreach@maidsafe.net. Well, I wish I could go. It's a bit too far from Tasmania, but maybe someday, as we expect, we see demand exceeding capacity, we'll be drawing names from hats in the interest of fairness. Obviously, there will be many who won't be able to attend for a variety of reasons. Marketing metrics. So notice, we've compiled a handy summary of safe network marketing metrics over the past 3 months. They've got a nice little chart here. I'm not going to go through that, but have a look at it. It's a nice little JPEG image. We'll be working hard for improvements across the board, and we'll publish these fairly regularly in the future, updates to allow you to monitor progress. And they've got apps and about team outings last week. They've given a talk on Rust to a packed room at FOSDEM over the weekend. FOSDEM, I'm not sure what that acronym means. I've seen it before. And Doug Campbell, he's one of the marketing people, speaking on a panel at Glasgow University yesterday on decentralization and the rise of fintech, financial technology. So their team is getting out there, and that's, going to get more and more exposure. Well, it's not so much exposure to the crypto community, it is exposure to the general crypto development community, the general programming community, and that is going to become the general crypto community, because crypto is going to just be sucking everybody in eventually. This Saturday the 10th, Doug Campbell will be at the Durham Blockchain Conference. It's tomorrow. So do say hi if you're planning to head along. Recruitment. So I'm not going to go into much more than that. That's more technical details. Please read the update if you're interested in the details. And that's all I have today. Jason, Mike, have any last words? Nope. We might have a communication.
You cut it.
Oh, there you are.
Yeah, I think you cut it out for a second. I don't have anything to add.
Oh, all right. Well, that's all we have for today, folks. I'd like to thank both our viewers and my co-host for joining me today. We hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others. And tune in next week for another interesting episode. Thank you.